So, Wall Street kicked off the week with more record highs as all eyes turned to the Fed and U.S. China trade talks. Hey everyone, it's Tuesday morning, September 16th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. The Standard & Poor's 500 rose almost 0.5%, closing above 6,600 for the first time ever. The Nasdaq jumped nearly 0.9%, notching its sixth straight record close. And the Dow barely edged higher, but still managed to add more than 0.1%. These gains followed a solid week where the Nasdaq and Standard & Poor's 500 saw their best stretch since early August, while the Dow finally broke a 2-week losing streak. Now, all the attention is on the Federal Reserve's meeting, which takes place tomorrow. Traders are pricing in a 96% chance of a quarter-point cut and about 4% odds of a jumbo cut. An easing move could give stocks another boost, especially with all the excitement around artificial intelligence that's still fueling market sentiment. And one subplot to watch, whether Stephen Moran gets sworn in as a Fed governor in time to vote at this week's meeting. Meanwhile, trade is back in the spotlight. U.S. and Chinese officials sat down in Madrid for another round of talks. According to Treasury officials, the two sides agreed on a framework for a TikTok deal just ahead of the September 17th deadline for a U.S. ban. That news sent shares of Oracle higher on Monday. Elsewhere, Nvidia slipped slightly after reports that China's antitrust probe found preliminary violations. But Tesla jumped more than 3%, turning positive for the year after Elon Musk bought $1 billion worth of his own stock. So, markets are breaking records, the Fed is on deck, and trade tensions are back in focus. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.